local revenue for schools will be introduced in Part 1 of this presentation. Property classifications are the particular emphasis. The federal government pays a pittance with regard to the total amount of revenue that schools get. Then you get into the state governments and you get to the local governments. And depending upon whether you're a high wealth district or a low wealth district, that's going to depend on whether or not the majority of money comes from the local source or comes from the state source. If you are a value poor school, you will get more money from the state by and large. If you are a value wealthy district, you will generally get less money from the state. So that kind of sets the backdrop. And when you look at those numbers, obviously this local share is a major part of the money that is needed to fund schools. This map of the United States takes a look at the positions of how much individuals are taxed. And you will see that Texas is number 1. They tax their people the heaviest with regard to property tax, okay? As you look across that map, you'll see that Ohio and Pennsylvania are in the upper tier, 11th and 12th in this particular 2011 source. West Virginia, 45th. You know, as I've taught this course, of course, hate to say this, Jimmy, but people make fun of West Virginia.
Oh, I know.
They make fun of Appalachia too, so we all get kicked. But as I put this course together years ago and started looking at West Virginia, I started to have a different look at West Virginia and the manner in which they fund schools. They are much more progressive and much better off than Ohio, Pennsylvania, and many, many other states. And in the meantime, they don't beat their taxpayers up to do it, which is rather interesting to say the least.
Well, here's a story that sadly many of you probably know all too well. The value of your house is either flat or probably down, but your property taxes keep going up. It's happening all around America. Cities and towns desperate for cash keep jacking up property tax rates or even reassessing higher in a down market. Mark Robin has been studying this unsettling trend. He's an economist at the Tax Foundation and joins us now from Washington, D.C. Mark, a lot of our viewers have written into us about this, that it's happening to them. Their question is why? So why?
Well, that's a good question. It's kind of hard to answer exactly, but there's a few thoughts out there, a few theories. One, of course, is that property taxes are kind of unique in that local governments have a lot of control over the tax rate that's levied. As you said, the property tax is a function of the assessed value of the house and then the tax rate that's applied to that. Things like sales taxes, income taxes, you know, your state legislature has to get together and pass a bill, and you know, there's a lot of public discourse about it. Property taxes are a little more easy to mess around with. You know, local authorities can increase the rate annually, basically without much oversight,
Yeah.
or people can't really do much about it. And I mean, you can always vote out. You know, depending on how your local government works, you have some control over who's in charge of it. But it's a lot easier to change those rates.
Yeah, you know, I know in New Jersey, the whole state's been undergoing a revaluation. At least in my town, there's been a lot of conflict. A lot of people's homes have been revalued up 20 and 30% since they bought them 5 and 10 years ago. But yet sales transactions seem to be, you know, flat or down. And people just wonder, where are they coming up with these numbers? You know, as you noted, it's very hard to fight this trend. Do you think that governments are simply just taking advantage and hoping that people do not fight the revaluation because it takes time and often money?
Well, it's tough to say. That may be. You know, a lot of times you hear people complain that, you know, local governments basically you know, decide whatever they want to spend next year, then look at what they expect the assessed values to be, and kind of adjust the rate to come up with whatever revenue they want. It's not, as you said, it's not as easy at the state level to do that kind of thing. So that may be going on. There's also a bit of, as you said, the assessments are changing too. And from 2007, 2008, 2009, what we saw with property tax or with home values was a lot of volatility. Obviously, everyone has seen those charts. And it may just be that they weren't sure exactly what was going on with housing values. With them falling so fast, it's tough. Maybe they were assessing them lower, but not low enough. So it's tough to say exactly what the problem may be. And of course, some states don't assess every year, so it may be that they assess every 2 years or 3 years or something like that.
Yeah, and individuals don't have a lot of control over this. I mean, they can go fight one-on-one to the magistrate or the assessment committee or whatever it is, but they have almost zero control over spending. In your research, Mark, have you found that spending rates by local municipalities, towns, cities, governments, etc., are pretty much tracking what property taxes will do? That if you see spending way up, you can pretty much bet that in a few years, whatever, your taxes are going to mark that increase.
Well, yeah, I think that may be. I mean, spending has to be paid for. I mean, I haven't looked at the data in regard to that with property taxes, but spending has to be paid for, and I think you make a good point that people don't like property taxes, people don't like any taxes really, but they do like government services. So there has to be sort of a balance between what you demand of your government to provide to you and what you're willing to pay. A lot of people, you hear sometimes people want to get rid of property taxes. The problem with that is if you're not cutting spending, what's likely to happen is that tax burden is going to get shifted to the state government, which you have even less control over in a lot of circumstances. At least at the local level, you can have some control over either where you live or a little more control over whether you want your local government to be sort of a high service, high tax government or a low service, low tax government.
But on a basic level, though, your data is pretty clear, though, right? I mean, even as home prices are flat or down, home property taxes have gone up in many parts of the country.
Yeah, that's right. And if you look at some of the newer data too, it's a little more tentative, but it's subject to revision and everything like that. But you see that property taxes are really the only tax that didn't fall in 2009. So
there you go, Mark Robin of the Tax Foundation. Mark, always a pleasure. Thank you very much.
Thanks, Stephanie.
All right. Well, speaking of that, we know that home builders are struggling.
We'll end up getting more involved in why these things are happening or why they've happened as we get through this night's presentation.
Well, here's a
real property, a house, a utility building, a business, a manufacturing plant, land, all real property that most states do in fact assess taxation on, okay? And many of you are homeowners, and so therefore you pay your property tax maybe through your mortgage. And that tends to be an issue because when people are paying it through their mortgage, they might not really know exactly how much they're paying, which is a concern. And one of the things we hope that if you have been doing that, if you're doing that, hopefully after this presentation you'll take a look at exactly how much you are paying in your tax. So when we start dealing with property tax, we start dealing with different types of property. We've already mentioned land, building, and improvements. Those are considered to be real property, okay? Then there is what is called personal property, and that's everything that we own that is not property. Jim, you live in West Virginia, right?
No, I live in Steubenville.
You live in Steubenville. Well, you escape the personal property tax on cars. People in West Virginia, you live in Wayland? Talk to them about your...
Yeah, pretty much everything you own, you have to pay. Like if you have a boat, you get taxed on it. If you have a car, you get taxed on it. If you have jet skis, you get taxed on.
How's
It's pretty much
that
everything.
collected?
You have to pay it once a year. It's in like July.
You're sent a personal property tax statement. You have to claim what it is, the
Right.
value of what it is, and then there's an assessment based on their rate for that. So, personal property,
It's all titled.
Yeah,
Things
everything
are
you have to,
titled.
everything you have to register.
things that are titled and registered, okay?
ATVs, third
So
party.
that's personal, what he's saying?
Yes, what he named is personal property, okay, that's all, everything that one owns is considered to be
Yeah.
personal
Yeah.
property,
Yeah.
okay? So, another type is called tangible personal property. And tangible personal property is business equipment, for example, manufacturing equipment. That's tangible personal property, okay? And another type of personal property something like CDs, things like those kind of investments. Those two are personal intangible. Of course, tangible, we can put our hands on it, intangible, not so much, okay? So, those are the different property types that we see. As we start to think about the different types of property that are taxed, houses, utilities, et cetera, buildings, land, real property, there are certain structures that are not taxed, exempt from tax. What do we see here? Church. Churches are not taxed. And by the way, this is pretty universal across the United States, okay? What are we seeing here? Government buildings, not taxed. Government owned parks, government owned land, not taxed. And I showed you a park. Cemeteries, not taxed, okay? That gives you a basis for the majority of items that are not taxed, okay? Interesting story, we did an audit when I was the superintendent of all of our real property in our district, and we discovered that there was an individual who had purchased a church, had turned it into a residence, and never paid tax on it for about 20 to 25 years. And had we not done that audit, we never would have found that. There were a number of other things that we discovered in that audit, but that was one of the things that was rather interesting and rather revealing. So as you can see here, there are just a variety of different types of property that's assessed, from multifamily housing, industrial, land, retail, et cetera. So those are the various kinds of things. The one thing that we in the school business need to understand is that we are not the only entity that has the authority to levy a tax. Townships. Why would a township levy a tax? What would a township need to levy a tax for?
Road improvements, things like that.
Go ahead.
Road improvements, water.
Yeah, road improvements. Let's hope that if we get some snow, there're gonna be snow removal, those kinds of things. And they pay their wages to their employees, so they have the authority to tax, okay? Don't know if you can tell what that is. Oh yeah, you can tell what that is. Police departments have the authority to tax. By and large, police, and you're gonna see fire departments here in a minute, they tend to win at levies in Ohio, and probably West Virginia as well. You can't probably tell what that is, but it's a library. It's a library. Libraries have the authority to tax. Vocational schools in Ohio have the authority to tax, okay? And fire departments. Now, When I say they have the authority to tax, what are we talking about here? What do we mean by that? Todd?
They, in order to raise revenue, they have the authority to put a levy on the ballot.
Absolutely, absolutely. And, you know, as you think about your voting history, you know, are there other things that you can remember that you voted to, because there are other things, that you voted to increase the revenue for? Can you remember anything in particular?
Is it the homestead?
No, that's a whole different ballgame. That's a whole different ballgame. We're gonna get into that, but that's a different ballgame, okay?
I think in Toronto, we voted on a levy to have firemen full-time, because it used to just be volunteer.
Yes.
I think so.
I would say,
Years ago.
Yeah.
you know, I would say that good possibility that happened. You know, and of course, just like schools, when they do not pass or are spending more money than they have income, they have to reduce their individuals, their force, so to speak. Some of the other things that have ability to tax, parks, ability to tax, alcohol rehabilitation. Maybe sometimes you might recall that you voted for some sort of alcohol rehabilitation. Senior citizens centers, they do well at the ballot box, so by and large, okay? So it's not, yeah, go ahead, Andy.
What was that first picture with the South Whitehall Township?
That's
What they represent?
a township.
Just a township?
That's just a
Yeah.
township. You know, it had the word township on it,
Okay.
and I wanted something that reflected the township, or a township, and so that's why I used that. This concludes part one of the presentation.